Hey traders, Adam Delgado here, market test commentator at Global Prime Forex. I just spent more than 1 hour interviewing Alex. Alex is an experienced Danish trader, active user of our Discord room, and on top of that, he's soon going to be running his own mentor room. This video serves as a purpose, the purpose of getting a better understanding about how his mind works, how his mind operates as a trader. He shared plenty of golden nuggets, and the impression that I got, which is just a reinforcement of my existing idea, is that Alex is one of a kind when it comes to his independent thinking process and the way that he approaches the markets to generate ideas and trades. I would consider Alex's style a hybrid of sorts when trading by combining fundamental narratives, the psychology of money flows, and some technical patterns. Enjoy the interview. Cheers. Hey everybody, this is Ivan Delgado, market test commentator at Global Prime. Today with me is Alex. Alex is based in Denmark. He is an experienced trader, an active user of Global Prime's Discord room. Alex is also someone that, from what I've been able to gather, he kind of like takes a special spin when it comes to the markets. His perspective is quite holistic in nature. And I think that we will get into what defines him best, but for me, what resonates is he's someone who is very much into the psychology of money flows. And for those that are still not aware, he will soon be having his own mentor room. Now, as a reminder, the Global Prime Mentor Rooms is an arm of Global Prime. It's part of Discord and was literally just created out of the popular demand from the Global Prime community for a space where clients can subscribe to mentors and can understand how their mind work, their styles of trading, etc. So welcome to today's show. Alex, how are you?
Hi, thanks. Yeah, I'm fine.
Thank you for...
It's a bit early here.
Yeah, but, it's almost 8 a.m., right, in Denmark?
Yeah, but I'm a late sleeper, so...
Yeah, so thank you for being an early bird and making the time. I think that many people will appreciate, since you soon will have a mentor room. I think that is great that people can actually have a bit of an exploration into how your mind works and how you approach the markets. Now, before we really get things started, I really always want to get started with this question. Every single trader has a story behind on how they became interested in financial markets. Can you share with all of us what's yours?
Yeah, I can. I mean, I think it's called high school in internationally speaking. It was back in, I can't even remember, 2010 or something like that, or 8, that I was, the stock market boom was back then, and everybody talked about it. And then, I mean, I won't say I'm a nerd, but I have a competitive side to me, and it got unleashed very much in gaming communities. And so I thought it was like natural for me to like sort of pursue something in front of a computer that had sort of a competitive side to it, where it was very much dependent on your sort of skills and mental abilities. And so I started with reading up on different trading and stock market newsletters, and yeah, it got me interested. I was hooked. I mean, first time I was trading was with Saxo Bank, which is a Danish broker. I think it's also pretty well known on the international scene, and yeah, it sort of took off from there.
Awesome.
And, yeah.
So how did you make the transition into Global Prime, if I may ask you? What makes Global Prime for you a broker of your choice? Is it our features in terms of spread, liquidity, latency, execution, pricing model, commissions? What moves the needle for you?
I got drawn into Global Prime primarily because of the community. And so I've just been with you guys because I thought it was like a low-key environment, and you were not pushing anything. And I thought the Global Prime staff was very encouraging and very sort of fresh in ideas, and were willing to change a lot of stuff. And also, it was the first time I saw a broker on Discord. which is for me at least primarily a sort of a gaming communication tool. So that's kind of a new thing. Initially, I thought it was just sort of a scam, I think. But no, it definitely proved me wrong. And I see that it's a pretty serious program and that it's taking sort of a different path in terms of being very transparent and really trying to work with its customers.
Yeah.
And I like that. Yeah.
Yeah. So how would you define yourself as a trader, Alex, if you could elaborate?
Oh, how would I define myself as a trader? I mean, I keep morphing into different forms, I find, but primarily I would say that I'm trying to understand what the market is thinking, basically, and I will do that with a lot of different instruments in the financial markets to see where positioning is. And so, I mean, it's very hard for me to like say directly what I am, but I guess I'm sort of tracking order flow. What you said is not a bad description of me.
Psychology of money flows.
Yeah, that would not be too imprecise. But also a big technical trader. I just guess I want to create narratives in the market, which is very visually. Many times you hear a lot of news articles, they say this, they say that about different central bankers, different speakers, different geopolitical events, etc. And no one really understands how to trade it or just make it more digestible. And so that's what I'm trying to do all the time. I always try to see how I can take something sort of cryptic and then break it down into smaller pieces and try to like collect it as a whole and see whether or not I can make sense of it. And if I can make sense of it, well, there's a beginning for potential trade.
Yeah.
So
could you give us an example of how you would go about building a narrative, either from a recent trade or from a trade that you might be actually stalking in the near future? It'll be great for us to visually understanding, okay, so this is how you're going to be first approaching the markets. This is what you're going to throw into the mix in terms of, evidence that makes you build a directional premise, etc. Take the floor.
Yes, I can do that. Lately I have been watching, for example, the Turkish lira. And the Turkish lira has, for a long time, if you look here at the daily, it's just been going almost parabolic.
Ballistic, yeah, absolutely.
Yeah. And I first got interested at this point just because of the formation of like trade. And I knew that such a clean formation was probably central banking doing operations into the market. And then it popped here, and well, that initially got me interested in it just because of the violent movement here. But I never took a position, mainly because the cost of doing business in US in Turkish lira is pretty expensive. The spreads are wild at times. And so I've just been tracking it over and over again. And I'm looking for like, so when do people actually start taking profit or shorting? Like the market starts going the other way. And so what I've noticed, and this is sort of how I build into positions, like I first start on a mental place. I never just go outright and start shorting into the market or taking trades. I try to like formulate some sort of idea about what is happening. And so ergo then was, well, for the main part, if we go back in Turkish lira's history, for the main part it's not a miscommunication, but ergo then was doing opposite of what market wanted to happen. So Turkish economy is doing really bad in fighting inflation and so on. And they wanted him to ease, like every other country is putting down the rate or cut the rates. And he didn't want to do it. He hikes, and so the market goes ballistic on him. He does, and at some point, I can just just to make it more visible. This is the US dollar against the Turkish lira. Maybe I'll just take a weekly. I'll just get some of the other indicators, because some of my indicators are based on, this is a lot better, are based on monthly data, right?
Okay.
Say some of the inflation data, if I go on a daily or intraday chart, they won't show up. Anyway, so what we're looking at here is the Turkish lira, US dollar Turkish lira, and the gray line is their target repo rate, the interest rate from the central bank, and then the yellow one is the average funding cost. And why I put it on is because lately the central bank has been doing tightening measures in the background, so they're not touching the target rate or the main interest rate. They're not targeting that. They're going into backdoors, let's say the swap market, and making it harder. Because there's so much outflow of Turkish lira, and they want to stop that because they keep devaluating their currency against the dollar, as we can see. But this was the period I was talking about where they were actually putting up the rates, and I think it was because Erdogan was fighting inflation and he wanted it to still be high. Whatever, the market did not agree with it, and he got punished. And then they started signaling that they would actually start to ease these rates. And so the market starts taking profit. They start cutting the rates a lot, but still the market goes the other way. And this is where we enter the COVID area. And also just the market doesn't like Turkey a lot. You will see that in the news prompters a lot, how they keep being very skeptical about their economy. And so lately, Erdogan has done basically the same thing he did when it crashed, which is to put up rates. But now he's been seen, and this is the funny thing with sentiment, is that now he's been seen as sort of a bold character, because everybody is now almost negative zero rates, right? And now he's putting up the rates in an environment where everybody is insanely easing. And this is where my thesis starts, because we have a lot of people who sit long in this. So this becomes sort of a more behavioral positioning type. There are a lot of people who are already long. And so when Erdogan is trying, or the central bank of Turkey is trying to tighten their grips, a lot of the people who were initially long, and I can see it on the sentiment, sort of the news wires, that they get nervous because the talk is shifting to him being bold and him being sort of a first mover, and this might be good for the economy because then he can fight inflation more, and so forth. And the market, while it's hard to see here, if we go on a sort of a smaller time frame, I think we have to go intraday on this one.
It almost feels like he wants to be a first mover out of desperation.
yes, but for me at least, it's like maybe it's just a shit economy by the end of the day. It's just, I don't really care. And what I care about is the fact that there's a lot of people who are already very, very, very long in Turkish lira. And I mean, against it, they're short Turkish lira. But and so whenever this sentiment starts changing, there's an opportunity because they can get squeezed. So there's a lot of traders that can get squeezed because they start taking profit, right? And when you're long, well, you start going offer, and so there's opportunities for a lot of, I can say, long covering here if the price starts like creating boundaries and patterns and so on. A lot of people will be very fixated on the price, and you can see here there's this place here and here and here where we're going upwards still, but you can see that the market is getting more and more like afraid of these tightening measures that happens usually every Friday and Monday from the Central Bank of Turkey. And now we're reaching a point where if I go to like say a weekly, monthly, we have to go to monthly. we get to a point where down here we have the inflation year on year. This is the green line here. This is the average cost, so it's not as good as the target rate, average funding cost, but sort of you get the picture that if he put the target rate up to, or the central bank put it up to 10 and a quarter, and inflation is just about 11 and 3/4. So for a trader to hold position and make money just by holding it, you know, you have to have the interest rate at least be above the inflation. So he's getting to that point, or the central bank is getting to that point where it can really scare traders, because if you can start funding into the Turkish lira and actually make money just sitting in it, well, it's going to drive a lot of the longs away, because they'll be scared. It's just a mental thing more than anything. It's not because I think the Turkish economy is good. It's more of a positioning thing, and then looking into, you know, like the new developments into it and see, okay, so how do the traders react? And I do think that, well, tomorrow they have another rate decision, and so the market is somewhere expecting that, you know, there'll be a hike, but not so much. But he could surprise, and if he surprises, he can start breaking down a lot of this long structure. And if you're sitting with a huge position in this will make you afraid, and so you will, per definition, start taking a bit of profit. Just because it's so hard for the market to know, so what's going to be the next move, and so forth. So it might be that in the long run we're still going to go up, but if this drops from, say, up here at 20, what is it now, 8, almost $8, well, down to 6 or 7 or whatever. I mean, there's a lot of profit to be catched. And so that's where I'm at the moment, and so I'm tracking it on an intraday level. We have this here. See, just gonna make it. So this is the latest development in his tightening measures, and this tightening measures should suggest that there's another hike coming, and you can see the market is stalling down. And usually when markets stall down in front of news, it's because people are taking profit, and that's good, because it sort of creates an environment where potentially it could pop, and so that can snowball really quick if you are sort of extreme positioned in the market. So that's my Turkish lira right now. I'm just thinking about, but I've not taken a position yet.
Are you nonetheless trading actively intraday out of this narrative?
No.
Into the short side? Not yet?
No, not at all.
Okay.
I will wait. I sort of have to see whether or not it starts breaking structure.
Okay.
And if it does, and is positive, and the sentiment starts going his way, you know, I would still wait. You know, I want to get to that moment where you're like, oh my God, right? They're really catching on, because still you have this thing where they just override him, and then they go higher and go higher, and so you can end up fighting the market, and I don't want to do that too much.
Yeah, it definitely feels like if you want to be shorting this market at this moment in time, you would be going against a massive moving train, a bullet train, if you will. Really fast momentum in this market. Now that would be you creating the story that leads to, you know, this more conceptual and fundamental perspective of where we stand in terms of the Turkish lira. What would be the next step for you? You want to wait for some type of technical evidence that we've broken structure before you actually pull the trigger?
I want to see him surprise the market.
Mm-hmm.
Like I want to see the central bank of Turkey scaring the living shit out of traders.
Mm-hmm.
And I think that will only happen if they really bump up. I mean, if they hike heavily.
Yeah.
Say they go 300 basis
yeah.
points up out of nowhere.
I'm more interested about what would be your reaction, your action once that happens. Would you be very meticulous in looking for a retest of what used to be a structure of support and then gets retested? Would it be more kind of like randomly
Okay, in
based,
that way.
your involvement, your engagement in the market? What would it be like in terms of your trading methodology in a nutshell?
All right, so I actually have a really good example with this.
Bring up other charts like Mexican peso or gas or any recent trades or
so
others
I'll
that
show you a really good example of what you're talking about. Oh.
I mean, at the end of the day, you have to have your premise, and then it's all about, managing the risk and getting into the market. So that's what I'm interested in now. What leads you to enter the market other than a surprise or a story that you see playing out the way you expected in your mind? Go ahead.
Mm-hmm. Mm-hmm. Yes, so it is again sort of a behavioral thing, because once you enter the market, everything becomes a lot harder, both for entry and exit, because how you're going to play this theme is really important, especially if you want to have some sort of tight stop. I mean, you can go with 400 pip stop loss, but that's not my thing, because then you're going to be very low size usually, unless you're just, insane. I don't know. But here's a really good example of sort of an entry criteria, and this is
what market are we looking at?
This is natural gas.
Okay.
So going into this event, I'll just quickly go over it. So you have the Delta storm developing in the US, which puts pressure on the supply side because they're closing down a lot of the natural gas producers are closing down along the coast of Mexico, and so that creates sort of a supply destruction, and so everybody right here. And this comes to another thesis I have about the market. There's some sort of a natural law in the market you should be careful of, and that is when information gets really, really perfect, right? So you enter a state where, I mean, the most extreme example of positioning in that natural law I'm talking about right now is where your neighbor starts talking about the product, right?
Mm-hmm.
That should scare you a lot, because it means that positioning in the instrument is extreme. So here there is a natural entry in the natural gas. This is the futures market, so it's a bit different from the cash I trade.
Hourly chart.
This is a daily chart of the gas. Yeah, but anyway, the cash looks a bit different, and it created sort of all time highs right here in the futures market. It's down here. I don't have the cash on this one, but it will do, because it's more the intraday problem you face as a trader when you enter, and that is that by the time the developments is underway, sort of I went long here. I went long down here, and so it spiked up. But I knew that the problem is that when you get a lot of information released, there's already a lot of traders who are long natural gas.
Mm-hmm.
And what they usually do, which is sort of a little bit counterintuitive, but is also a logic thing, is that they've probably not been trading the storm, but they've been trading something along those lines of supply disruptions. Mm-hmm. And so when you get to the perfect information, when you get to the event itself and it is released and now everybody know, the market have a tendency to start taking profit. Mm-hmm. That's it. And it's very counterintuitive, and it's because usually you would think that, this is where it's going to break out, but in reality there's so many orders entering the market at that point that it actually starts slowing down. Mm-hmm. So this is when information is very complete. So you can see by the time it opened up, and yeah, there were disruptions. The Delta did create a lot of problems for some of the terminals that move the natural gas, liquid natural gas out. But it's just profit taking, more or less. There's actually nothing new developing. So if you went long there in natural gas, for example, on the basis of the Delta creating this supply disruptions, you would, on top of paying insane swaps, because this is a sort of a high volatility event, you will get almost killed just from the beginning, just because a lot of people are taking profit and on this sort of everything is known environment, and that can really frustrate traders.
Yeah.
So back to the Turkish lira is that this can be different, right? So if he goes out and he surprises everyone, then there's a big chance that if you put on a short directly, it will carry a lot of momentum because it's not that known. So traders are a lot more panicky, and it will create a lot more flow than, say, when everything is more already sort of priced into the market, right?
Yeah. In a way, these
So-
two charts really telegraph the opposite behavioral dynamics. In one chart, you had the market anticipating either present or future events, and that's been actually factored into the price, as in the case of natural gas. Whereas in the Turkish lira, there is going to be a major shocker if Turkey comes out of its way and it starts to really panic the market, right? So kind of like the other end of the spectrum, Turkish, as opposed to that's natural.
Yes. So
natural
it's
gas.
just you have to question yourself when you're taking trades. I mean, if you're just only taking technical trades, then I guess it's a bit different, right? But if you're looking at developments into the sort of the fundamental sides and thematics and so on, you will notice that information. So if you're taking the trade, say on a breakout, last day, for example, we have the euro pound, where we had a breakout here, right? So all traders here, they were pretty much long or against the developments of the Euro trade deal, Brexit deal. And so they're against it, saying, oh, it's not going to happen. So this is all these traders. And but then slowly developments, well, maybe it would be positive, sort of. And you can sort of see that there's some sort of a technical pattern, right? Where you can see sort of the order flow, the positioning of traders. And then here, the UK goes out and says that that they're not willing to do any trade deal or any more talks unless that the EU sort of changes their tone and so forth and get real. I mean, and so this somewhat surprises the market and goes along. But this is still, for me, this is still not anything significant. It's still in the card, but it is a bit of a shocker, and so it penetrates the market. And there's a lot of people that's already short here. So when he goes out, or the minister or whoever said it goes out and say stuff like this, is gonna create a need to get out for all these people who are short, and also the ones that are going long. Well, they could start adding more to their position, right? But you enter periods. So when I here, for example, I want to be actually long the pound, but I also could be trading this because it just makes sense. It's sort of an easy trade in terms of the break structure. There's like a pretty good story behind this, but at the same time, it's not anything dramatically changing sort of the picture. So a lot of people will overreact, and so this could potentially become a reversal just because people are overreacting to the news, right?
Yeah.
And so whenever I trade a breakout like this, say I find a structure, I would trade it on some news, I always ask myself, so how many people are onto this? Because you can stand in a situation where you get the breakout, you get everything you want,
Yeah.
but information is so perfect, and what you're doing right now is just trading with the crowd. This is sort of a herd trade. So the chances of you getting annihilated is really, really big.
And I'm
You
very
have to,
interested about what you just mentioned, trading with the crowd. Now, you obviously do not want to be part of the herd mentality, but rather you want to have your own unique ideas and stepping, let's just say, outside of all those that are going to be followers of the market narrative as news outlets, release certain news that at times might even be targeting this herd mentality type of approach. How do you, what does your routine look like in order to generate these unique ideas? Do you have a very well-defined process or do you have go-to websites that allow you to generate in a fairly, fast manner different narratives, different ideas? It'll be great if you can actually tap into that, that front as well.
yes. Well, there are things you can do as a trader. I mean, on the news side, I'm obviously more blessed than a lot of traders just because, well, having a Reuters terminal is very different to looking at Forex Factory, for example.
So you have
So
news headlines
yeah,
there?
so I do have news, right? And
Mm-hmm.
and usually what I do, to sort of, okay, so what's happening in the market? Obviously, you can read bank reports. There's a lot of free daily or weekly bank reports where they talk about. So this is sort of the developments. These news are coming out, blah blah blah. But mainly, you want to pay attention to any narrative building scenarios, right? So what I will do usually in the morning, I'll go in and I'll see, so this is what you can do with Reuters. So they have this sort of, what do you call it, the filter, where I can see on their terminal, so what was the most read article this day.
Mm-hmm.
And so I will skim through this and I can take it, what was it the last hour, the last 24 hours, the last week, etc., etc.
That's a very interesting feature for you to really understand or, take the temperature of what the market is looking into and reading into it.
Yes. So, and also just by reading a lot of like analysts, what they say and mention, like sometimes they will mention some products and so forth, I will start tracking them and like see, okay, so how does that correlate? So you just learn a lot just by reading a lot.
Mm-hmm.
So, I mean, I guess to formulate ideas, you just have to get into the sort of routine of reading a lot. But I get that for most traders, this is really painful because just going in and start reading a lot of articles can quickly fatigue you.
What about the
Like,
upcoming events? For example, if we have the RBA monetary policy decision, or I think you were mentioning last week that we had Australian federal budget being released, and you were a bit like you were reacting in a manner that made me think that you may actually be taking some positions based on these behavioral dynamics that you are going to be using to approach the market. So specifically, I'm asking you, other than reading the news, that the most viewed news, are you going to actually be preparing yourself for upcoming high volatility events that may actually lead to some type of traders being trapped in the wrong side of the market, counterintuitive moves that you look to exploit as well?
Yes, but it always, I mean, I just don't, usually this is what happens, is that I find structure in the market, and you can call it just very traditional patterns, right?
Mm-hmm.
So take here, for example, you have a head, shoulder, and shoulder, and then you have a neckline and it breaks, right?
Mm-hmm.
And usually structure happens, and it's probably not because it's a head and shoulders pattern or whatever. It's just that structure happens because information transparency in the market, the information in the market increases, right? So as information increases, there's constant news releases, markets keeps talking about the Australian dollar, the ABR, the budget, etc., right? So as that increases, orders keep pounding into the market. And what usually happens is that it starts to slow the market down rather than speed it up. And so it starts creating this structure. And so what I do is that, so I go over a bit of charts and then I see structure like this. And this was how I formulated my first idea with this. I looked at this structure and I was like, well, there's obviously something happening here, right? That's just my initial thought, right? And so I start tracking. I want to understand, this is more of an intraday view. So I want to understand, so why did they short here? Why did it short here? Why did it go long? Blah, blah, blah. All this. So I try to understand, so what is the sentiment underneath this? What are they doing? What are they thinking? Right? And right here, you had the ABR budget. And initially, I went long here because I thought I was going to go long, right? Like this, right up, straight up. And it was because if you overlay the Australian New Zealand dollar with the spread between the US 2 and US 10-year, you will see that, not always, but some of the time, you will see that it correlates well with the easing story. So right here, the market was pounding up, and I was like, initially thought, okay, so, and this spread has to do with how the Fed has now changed a lot of their policies with keeping the front end like fixed, and so the 10-year just keep going higher, because as long as they talk about the easing, or they will come with a lot of fiscal stimulus packages, well, then the future starts getting sort of discounted. They go out of bonds because they think that it's going to go, because they want to move into stocks, right? They want to go away from bond market. So if easing is there, they go away from bond market into stocks. They're always have this fleeing capital. They're just there where the yield is. So that's sort of the main reason why you can use this as a proxy for the magenta line here. You can use it as a proxy for sort of the easing talks and the market's expectation to easing. But yeah, so I went long here, and obviously I lost directly, and that made me think, oh, so there's something weird going on, because you're penetrating the market, but then all out of the blue, you have this increasing stimulus talk that just pounds on the news all day long from America, and it just skyrockets this all the way up, and it penetrates, and so it fades out, and talks start going bad, and RBA, the story about him easing and constantly wants to easing and more packages, it just weighs on the Australian dollar more than the New Zealand dollar, and so it starts going down. And at this point here, you're below sort of where you would think that some of these traders are right now, or just up here. I mean, you have two places you could enter against this. Basically, what you're trading here is just that the RBA is just easing beyond market expectation. And so right here would be a place where people would want to go long. And so if this fails, you could take a short here and then, brace your luck. And also here you're below sort of the order flow from before. So this is all the expectations you had before. And this is starting to break down. So you could start shorting against it just on the basis of that. But primarily you would want to understand sort of what is the developments in here to better or have more confidence in your trade and your size to sort of try to exploit this. You might get a lot of losers here and there. I usually get that because it's so easy to get caught up in sort of the sentiment right here, right now, and yeah, you just have to be careful with that. But at some point, you get to a point where it has been developing for so long that something unusual starts to happen. Say here, for example, that the market should actually go higher, but didn't, and so your probability starts increasing for, okay, now this event can become really big. And
yeah,
and it did, it surprised
talk about the split of wins and losses. We were having a conversation on our usual Thursdays Global Prime Discord hangouts, and you mentioned that you usually take a lot of hits, meaning you take quite a few losses, but in the grand scheme of things, whenever a win comes, they tend to actually be proportionally much bigger than the minuscule losses that you've taken trying to, you know, prove that your idea is right here and there. Could you give us could you shed some light into how you would go about an idea? Are you going to be trying multiple times until it works out because you have firm conviction of the narrative and the market is giving you the right signals?
Yeah, so if the narrative it keeps being there, so there's some sort of thematic, and it is developing, and you can see the price reacts to it, then yes, I would keep going. Like and I keep trading into the market, and I will keep positioning small. It again, it depends on my conviction level. At some point, I will bet hard, right? Because I think that this is what it's gonna do right now, and then that's it. You just sit on your hands and hope for the best, and put in a stop. There's not a lot to do, actually.
Correct. Now, when it comes to my own profile as a trader, and I'm not going to get deep into it, but I really do see the markets very much like Mark Douglas said on his book, Trading in the Zone, which is there's a random distribution of wins and losses. And therefore, I'm not going to vary, or I'm not going to really be calibrating much in terms of my risk per trade. Now, when I listen to you chatting in our Discord room, at times I feel like you make a very distinctive difference when it comes to certain trades that might actually be A+, meaning very high conviction, and other trades that actually might be fairly poor in terms of conviction compared to that one A+. Could you perhaps give us an explanation of what an A+ looks like for you during this year, and what other type of trades, and maybe give the theoretical explanation on paper of how do you understand different trades?
Okay, so let me take a A+ trade.
And how that compares to another trade, which you might not be as confident.
Well, yeah, it's just a mispricing because it's in the future market. But what we're looking at here is the US dollar Mexican peso, and this is the oil. And here you have.
So what is that again? The purple line?
The purple line is the futures market for oil, crude oil.
Okay.
There's another ticker that might be a bit better because the pricing looks so weird, but it will do for now. So this is obviously the COVID event, and market participants are walking away from emerging markets, high yielding, risky currencies, and onto the dollar. That's the immediate action. But then over time, you can see that the market goes into sort of a triangular pattern. And at the same time, you have oil that just keeps rising. And you'll see this in a lot of emerging economies, this sort of pattern unfolding. And also you have the dollar going into the same thing, and you also have the euro that goes into the same thing. So you're essentially moving away from the dollar at a period after COVID. And this coupled with rising oil and the fact that Mexican peso or the Mexican economy is the highest yielding real rates to its cousins in Latin America, or just the emerging markets overall, it gives investors incentives that when the market starts cooling down away from this sort of panicky mood, that they start buying assets in Mexican peso, right? And so it coupled with the oil, futures oil, because Mexican peso has a lot of export of oil to America. So it correlates with this. So if oil price goes up, you would expect that there's be some sort of appreciation into the peso.
Mm-hmm.
And so this happened underlying this development here. As the panicky sentiment starts cooling down, oil starts recovering from this future market crash, flash crash, or whatever you want to call it, and it starts going below the development here. And I was shorting this, and that was an A trade for me, just because it looks so pretty, and there's so many people long here.
Yeah.
That when sentiment starts going opposite direction, and you have a somewhat healthy economy in terms of inflation not going ballistic,
Mm-hmm.
and you have a high yielder comparative to everybody else that's in that higher yielding space, it's just compounding. It's just a compounding effect. And so this would be sort of an A setup, and it's still an A setup, because where would traders go? I mean, if they're going to have a higher yielding economy,
Mm-hmm.
they're going to go to the peso.
Yeah.
And that's what we're seeing here. And if you look at bank reports and so forth, they were going to be saying somewhat the same thing. It's just a very good currency. So it's a setup. The problem with trading peso, for example, is just that it's up the elevator when it goes against you, right?
Yeah,
So
and
it's
it's
down
very,
the stairs, up the elevator. Yeah.
it can be very volatile because it's very much linked to the emerging market basket of currencies, right? So just like you've described the correlation of peso with oil, because Mexico is a major producer of oil, but you know, when things get to be settled down a little bit, then the market is going to go back into these old correlations. Now, but at the same time, if we have a major risk of event like COVID, then the market is just going to be unwilling to park the money into this high volatile currency. And that's kind of like what's happened, right? We had the ballistic event and then things started to move in the opposite direction. Now, when it comes to the bracket, let's just think about the brackets of risk that you may be placing in terms of your trade, individual risk per trade. What would be, let's just say, how much risk do you take on an A+ trade, and how much risk would it be on a kind of like low grade trade? What's the gap between an A+ risk trade and a low conviction trade?
So that changes a lot. It is really a mental thing for me. I've just learned over time. So if I get a big winner, an A+ trade, I could risk no problem like 10-15% of the account. And that for many would be like, oh, that's insane, right? But it just comes with experience. At some point, you just think, oh, this is really going to work. That might be the initial risk. And then over a couple of days, I'll start cutting it down to something a little less aggressive. But when I change, so position sizing is just about everything for me in trading. I don't care about win rate. It doesn't matter. What matters is that you put on size for me. That is it. You got to get to a point where you're going to put on size.
Yeah, it sounds to me like you grant yourself permission to put on size as long as you can somehow, use existing profit to go and turbocharge your gains. But you want to first, I suppose, make sure that you had a good bang, a good trade, so that you can actually keep piling into next trades what you've already been making in terms of profit. So it's kind of like profit dependable, whether or not you're going to be scaling up your risk.
Yes. It's a confident level. But whenever I get a big win, what I usually do, and what I think everyone should do, is when you get a big win, is you have to be very counterintuitive. So at the moment you get the bigger win, say, I don't know, 10-20% increase of the account, then you would want to just reduce size next to nothing.
Yeah.
It's just because because of sort of the probability of it
Yeah.
and how the human mind. So very quickly as a human, you start thinking very linear. So you think that, oh, okay, I won 20%. Oh, and then you start looking at the account. Oh, what if I made 40%? What if it just keeps compounding like that. And so you think that the results are going to be linear now because you just won and you proved yourself right and you're this big whatever trader. And so at that point, I usually drop a lot in size. It's really good because you have to reset. Because if you keep running that high risk profile, eventually you're going to die. The market will always win if you do that. Always. I mean, it doesn't matter how good I am at finding an entry or whatever, it's just going to kill you. I've tried it so many times. I lost so many accounts trying to go gung-ho on the market. I mean, it never works. So
yeah, let's talk about that for a second. How did you develop yourself as a trader over the years? What are the major lessons you've learned after blowing one account, two, or multiple accounts, let's just say? What are the main takeaways? How are you approaching things differently now?
Yeah, so from where I started, I can see that it's just nervous hands, right? So that's it. For me, at the beginning was just I had a lot of this nervousness in me, which make trading extremely hard. Because if you cannot hold, it's like a famous investor said that the market, people think in a 2 times 2 is 4, but the market is more 2 times 2 equal 5 minus 1, right? And so it's non-linear, right? So if you have a weak mentality, weak hands, the market usually destroys you. It's just so that's what I've been learning is just I have to put myself in a position where I feel strong. That's sort of, I mean, that's where I am right now compared to in the start. I would be a lot more high risky. I get like very risky setups, and then have weak hands. That makes no sense, right? But that's what I would keep doing. And so what you have to learn is you have to sort of teach yourself to get strong hands. And that just means that you have to be able to hold. That's my experience with it, at least in trading, is just you have to learn to hold and get those sort of good habits of being able to see that the P&L is going against you and it's okay.
Yeah. Key question. When do you determine that profits should be taken off the table? Just like you build a narrative to enter the market, do you tend to build a counter narrative that makes you exit the market to collect the profits?
Yes, so this is actually where I have the most problems. That is taking profit. And what I've learned over time is that you can always re-enter, and it's such a cliche thing to say, but it is something you just want to learn really quick, that you can always enter into the market again. There will come another opportunity. So it's, for most of the time, it's better to play safe in the market. Say you can exit on structure, right? That's me playing safe. If you exit on a sentiment, that's a lot less, it's not as secure. Like you can just trail behind some structure, some technical structure in the market, and that would be a lot more safe, I find. So, yeah.
Yesterday in our Discord room, you shared, or a couple of days ago, you shared a very interesting gold chart, and you called it the Gold Kiwi Roadmap. And I also want to kind of like connect that chart with the current pattern that we are seeing, which kind of like it is very similar to long position in the Mexican peso, but in the bullish side. So if you were to now look at gold, do you believe that gold now is in a narrowing pattern, in a type of triangle that is going to sooner or later be breaking to the upside? What are your views? Because I felt it very interesting when you were going, you were having this back and forth conversation with a few clients of ours, that you also built a major narrative as to why gold did what it did during QE1, QE2, and then QE3 as traders were starting to exit gold over time, and you drew that descending trend line. I found that to be quite compelling as a story for you to walk us through.
Yeah. It is true. I mean, the main discussion was just that you get to a point in trading where, well, you had QE1 and QE2, and then it went long gold on easing because everybody thought that, well, the next natural step would be a lot of inflation, and how are you gonna like secure against inflation? Well, you're gonna buy gold and go away from papers, right? So when QE3 landed, it came as a surprise, right? Because then gold started going down. And I understand the sentiment from most traders that like it can be very counterintuitive sometimes, but when you dig into sort of some of the reasoning, you'll find that there's actually somewhat of an explanation there in the market as to why stuff happened, right? And I think the main point for QE3, gold falling, was obviously over-leveraged traders and just a very over-leveraged sentiment. And there's parts of the central banking, they kept scaring traders. But main point was the fact that the indexes, the general stock market, was going higher. It broke higher highs.
Do you keep that chart? Do you have that template that you shared a couple of days ago with us?
I don't think no.
Okay.
I just made it for you guys and then deleted afterwards.
It did speak 1,000 words, but yeah.
Yes. But okay, so right now in the market, we have sort of the same easing thing going on. Just this time around, it's a lot of fiscal policies they're trying to do, and helicopter money and so forth. And I want to be long gold just because papers are just, it's so nervy that they have these high prices. And you want to be long the theme of fiscal easing. That's so are you going to be long equities? What are you going to go long? Are you going to go long the peso? Because that's also sort of an easing story. It's not because of the easing so much itself. It's not the numbers. Say QE3, they were still printing insane amounts of money, but still gold went down. So it's more of the expectation, the future expectation to it, right? And right now, what I start tracking is the ratios between markets. So here we're looking at gold versus some of the big US tech stocks. The orange one is gold against Apple, and the magenta one is gold against Google. Green is Facebook, and then last one is Amazon. And my point is that all of these companies, I mean, these are the big ones, but the general stock market, this is the general stock market here, is that traders have to decide whether or not they're gonna throw, so that they trade the thematic of this easing policy and where will the money go, right? So they have to choose between products, and it's just mainly this fiscal policy has to do with the market going risk on, right? Because they expect a lot of easing, well, it's gonna increase demand on the long term, and so you get more growth and so forth. And it has sort of proven itself a bit with China. That's another theme that's starting to rise slowly in the background. But here we have the indexes with DAX and E-mini S&P, and then emerging market stock indexes, the ratio from gold. So it means that when this is going down, for example, this market here, we have the S&P ratio with gold. When this goes down, well, it means that the S&P are doing better than gold, right? So what I'm looking at here is I want to see the flow of liquidity going away from indexes, general stock market, and on to the gold story, right? So they're going to go away from paper and into metals in this fiscal policy, risk on, whatever. And it might just go into some sort of inflation, like high inflation theme later on, but right now that's more easing. So who benefits the most from easing? And so I track some of these big stocks here, and you can see that, say for example, the ratio between gold and Apple, well, is starting to break out, and that could potentially mean that in the foreseeable future, traders are gonna go from paper and onto commodities or metals instead. They want physical products instead of papers, right? So that's what I'm looking at right now. And I mean, if you go to this is hard. I just gotta put this down here. If you go to the European, Eastern European indexes, I think this is Budapest and Warsaw and so on, you'll see that they're already breaking above March, starting to break. I mean, there's this from Budapest is already trading above the high. So some of the emerging economies are doing where gold is trading better than them. So I'm going into sort of the more risky economies, their stock indexes, and then see, so how does gold trade against them, right? I mean, how is the ratio between them? How it moves? And here we have the same thing. This is the Mexican, so this is another emerging economy. This is Latin America. Yes, so Latin America and okay, some of it's starting to show up, but there should also be the South African indexes. But the red one we're seeing here is against Mexican peso. And you obviously see that traders are favoring the peso a lot more than gold. So in that way, they're still putting a lot of money into peso rather than gold. And then why do they do that, right? And it's obviously because they think that at least now the peso is a better investment in this whole risk on fiscal easing cycle thing. But at some point, I do think that the themes are going to change, where we might see big inflation prints all of a sudden. I don't know, but this is what I would track. I would track a lot of these indexes because this is where people are mainly sitting right now. They're sitting on paper, right? They're sitting on indexes, all of them. So if you start seeing pattern, say in this sort of, you could track the gold ratio against some indexes. If you start seeing pattern where gold outperforms the general stock market, you can start formulating an idea to go long gold, for example.
Yeah. And what does the technical read in the gold chart itself against the US dollar, denominated in US dollar, tell you? Is it telling you that we are forming a triangle or some type of narrowing structure that sooner or later is got to break? And in terms of timing, is it suggesting that this should occur post US election? Would that be some type of catalyst for you to consider involvement in the upside, to the upside?
It's a good question. I'm still waiting for sort of the general stock market to become a bit weaker against gold.
Okay.
Because I think that traders will quickly convert into metals.
Yeah.
That's the natural way for them. Yeah.
You said that there has been in the past, and that has actually, there's empirical evidence that proves that there's been a very strong correlation between gold and the fiscal packages in the US. And you also are of the opinion that you think fiscal easing is going to be the new QE. QE has been going strong for 10 plus years. Central banks look like they're way past the point of no return. If fiscal easing is going to be picking up the slack of the QE, and they're going to be engaging in a protracted period of time of further easing. You even mentioned, and just kind of like just to put a bit of a fun spin into it, you even mentioned that last month you got 1,000 Danish, how you call your currency? Danish
Kroners. Yeah.
And that kind of speaks volumes, right? About this pattern that exists out there of helicopter money, which was unthinkable 10 years ago. So kind of like, I suppose that really reinforces your narrative about gold eventually gathering and garnering a lot of momentum and a lot of attention, because there's this ultimate transition from stocks into this story of protracted fiscal packages that are going to be out there. I'm not sure,
Mm.
even if we actually move away from stocks, you also have and perhaps you want to touch on it, but we also have the digital currencies story. We've seen a few central banks adopting that in Sweden, and there are many others that are making the right sound bites for them to perhaps within 3 or 5 years to evolve away from a global payment system and adopting these digital currencies. Perhaps that's going to be the final straw that is going to make Bitcoin go a bit more ballistic, because people still want to have this freedom. They still want to actually be part of a system where they actually protect their identity. And it's been seen as both gold and Bitcoin as a store of value. So perhaps that actually is going to be also playing into the view that gold is there to benefit if we see the rise of Bitcoin that many have been calling for. Your thoughts on it?
My thoughts, well, cryptocurrencies,
Yeah,
I
cryptos.
don't know. Yeah, I don't know a lot about cryptocurrencies. I'm actually starting to learn, but there are so many new concepts. I'm like going from a micro point of view, microstructure, and then up. And there's a lot of stuff I need to learn. For example, that Ethereum, here the other day, I think I created a chart. Let me see. Yes, so here I was just like brainstorming a bit, and I saw that. I mean, it's this movement. It's more like the narratives in cryptocurrencies. I get this general point of view that, well, where are you gonna go if paper starts catching fire, right? They would probably go to cryptocurrencies, I guess, but on a more trade to trade basis, like what I do right now. Like I have a hard time understanding it. There's some news that will get the market moving, but I've not spent enough time on it to actually give some sort of a qualified opinion.
Yep.
As of now. But
Yep.
I will do more research into it and then see how it correlates with different markets and so on and so on.
Is there any trader out there that over the years has become one of your biggest influence, a big influence for you to improve your trading over time?
Yeah, but it's more of like what do you call it? And I get philosophy of it, of trading. Like there are some good stories. I do like Druckenmiller.
Yep.
Just because he's very just technical, fundamental trader, like a hybrid standard trader. He has a very impressive record.
Yeah, for those that don't know him, he's an American investor who was part of Soros fund back in the old days. He's also president of the Duquesne Capital. And yeah, he's been, he's one of the most renowned investors of all times. Yeah, just to tell the audience.
But at the moment, I'm also reading like European big investors. I actually didn't know a lot of them, but there's one from Hungary I'm reading right now. I actually get 3 books in this week, I guess, from him, like a 90-year-old trader called Andrei Kostolany or something like that, which is just traders that has been active for like, I don't know, 70 years or something like that. They experience a lot of the ups and downs, and so they have a lot to like if they've been actively. And I do enjoy reading mostly about lone wolf traders because they have so much more experience, usually I find, in the emotional department. Like big hedge fund traders are, like, for me at least, garbage. I mean, there's some. Druckenmiller is a big trader, but I don't know, man. It's just when you get money from the outside pouring in great volume, there is obviously there's obviously a lot they need to take care of, and but the emotional connection when you're trading on your own, I just do enjoy traders that are more lone wolf traders and trade their own account and no hedge funds and all that stuff. They have a more unique perspective because they've not been so institutionalized. Like they just do their own thing and get successful with it. And
Yeah.
I find that it generates a lot more fresh perspective than more institutional traders, you could say.
Yeah, and at times it makes you wonder, why is it that if you're very successful, why is it that you want to set up your own fund and attract investors' money? Is it because you're seeking out fame? Is it because you want to have a bit more of a reputation in the industry? But for those that are keeping it very low profile, I do believe that there is a very strong correlation between being an independent thinker, being someone who generates ideas on your own, and not being well known. And then also perhaps that also can translate into the results that you're getting, because I mean, it's not like you're seeking out any type of attention whatsoever. So there's a lot of credit that needs to be given to those that are really doing very well, yet they're not seeking out popularity in a way, right? So is there anything else that we haven't touched, maybe other charts that you had prepared for me or for the audience that you like to go through before we wrap things up? I wanted to ask you, like, if you could just give a piece of advice to your younger self, or what are the best lessons that you've learned over time? Could you single out one or two as the best lessons, or what you would tell to your younger self so that you're better prepared, or you would just go away from these cliche questions and just say, put in the hours, absorb market, gain experience? What would be your takeaway when it comes to this kind of question?
It would be to get more interested in the sort of the sentiment, behavioral, fundamental side of things. It took me too long time. I was too caught up in looking at like indicators and so on, and also just being very fixated on getting the perfect entry is also something that I would tell myself, I guess, that it doesn't matter too much. I mean, entry is important, but not to the degree I went. I mean, I've just been so fixated. I guess a lot of other traders are in this category as well, where they just want to have this 100% win rate. I mean, it took me so long time to understand that I can actually lose many times, and it's just, well, it doesn't create problems. That's just something I could have gotten those stronger hands a lot earlier in my process. Like I just think that this obsession with being right all the time creates extremely weak hands. Yeah. So that's it for me. I mean,
yeah, fantastic.
That's what I would say to myself.
I think it's been a great conversation. Now, my main takeaway when it comes to all that you've shared with us today is that for those that want to join your mentor room, I suppose that anyone can join. There's not going to be any limitations, but it's going to definitely take a lot of time. It's going to be something that people will digest over time. It's not something that is very mechanical, but rather what I believe you will do the most is promoting independent thinking, perhaps your routines and how you actually work out the charts, and people, obviously some might get very interested. Is there any final tips that you might want to share with us as to what people should be expecting from your mentor room? Is it kind of like idea generation, the way that we've been bouncing ideas, you've been bouncing ideas with us back and forth in today's interview? What would it be like?
Yeah, I think I'm gonna be a lot more structured around my trading. Okay. In terms of like, it creates sort of a need for me to keep being up to date with a lot of different narratives and so on, because I do want to improve myself. That's the reason why I'm doing this. Yeah. Obviously helping people in the process is good, but it's not my main objective. But people, I think, will benefit from it,
and it will keep you more accountable to your processes as well.
Exactly, yeah. And I also think that in the mentor room, I will start sort of an account or something like that. I could start it with Global Prime, I don't know, but where, you know, it could keep me more accountable to some of the ideas I present and so forth in there, because you can talk a lot in trading, but I mean, you also want to get down to business, right? Like right now, we talked a lot about different themes, but well, what is the actual trading, right? And I want to dive more into that in the room, like like the actual sort of. So how would you perceive an entry here? So for not going into sort of a signal service thing, but more like get deeper into it and closer to the actual trade, right?
Yeah. Yeah.
So,
Okay, so it's
but
been a pleasure talking to you today. There are traders out there that are going to be following fundamentals, and that's going to reveal probably the whys of long-term trends. Then also you're going to have traders that are looking into technicals, kind of like, depicting the route that it's going to take for the price to get from A to B. In your case, you seem to have a hybrid approach where you're going to be looking at fundamentals. You might be waiting for the final evidence in technicals, and thrown into the mix, you're going to be looking at the psychology of the market and how to anticipate what other traders are thinking. So a very interesting approach, great special spin for you as a trader. Hopefully the results keep being on your side for the foreseeable future. Pleasure having you on board today, sharing your golden nuggets. And yeah, it's been great talking to you.
all right. Yeah, thanks for the opportunity to sort of share a bit of my ideas. And I hopefully in the future, I can go really nitty gritty with all this and present a lot of different ideas into trading that will, for a lot of other traders, make it more, I guess I want to make it easier for my former self to get into this side of trading. So for newer traders that come in.